two, one.
Hello, everybody, and welcome to Dash Traders Newsroom. And this week, we're going to be talking about trading technology and the technology of trading. And we also have some updates for you as well in our upcoming traders competition. As always, my name is Michael DeJoy. I'm the Director of Educational Services, and I'm also a licensed professional in the financial industry. And of course, my co-host here is Jill Malandrino, Global Markets Reporter from Nasdaq. Jill, how are you?
Doing great, thank you. Good to be here.
You look great with the Rutgers sweatshirt there and the blue screen, the Nasdaq screen. So I'm coming to you from Cartagena, Colombia, and it's beautiful down here. And looking forward to sharing with you some of the things that I've noticed as I move around and work from anywhere in the world. So let's jump right into the news. We had a little bit of news here this week. This week, the Federal Reserve came out, and the news pretty much sounded like this, brrr, which is the printing presses are still on. Although the U.S. dollar has gotten stronger, Federal Reserve confirms that interest rates are not going to rise until 2023. And the markets still fear inflation. I mean, the 10-year rate has been hovering near a 14-month high. And it really is, it's a big concern for the market because it looks like we're ending on a down week. So Jill, what are your thoughts on the never-ending supply of money in the monetary supply and the rising 10-year?
Yeah, the bond market appears to be telegraphing something very different than what the Federal Reserve is, and it appears that it's recognizing inflation is on the horizon. Now, while the data that the Fed uses shows inflation is still in check, I think with the pent-up demand that's going to hit the services sector, that's what's really going to impact that inflation data. And that's what the bond market appears to be telegraphing. And we're seeing the reaction in the stock market to that. So it was kind of a head scratcher with the Federal Reserve confirming it's not going to move rates until 2023. I mean, that's almost
2 years.
Not even, well, why can't I do math today? That it's been that kind of week, 12, just about 21 months. Mm-hmm. I just can't imagine that there's no wiggle room in there. I mean, inflation is going to move higher once we're back to pre-pandemic levels. So it just kind of was a head scratcher to hear the comments that they made. I mean, there has to be some kind of a balancing out there.
To me, it was almost mystifying because, I mean, already we see prices creeping up. We see the economy has already recovered pretty substantially. And of course, we just got the passage of the $1.9 trillion stimulus package. The checks are already being sent out electronically and are in the proverbial mail. And I mean, you have $5 trillion worth of stimulus. You have an economy that's recovering regardless of whether COVID is still a problem or not. It seems like the economy is recovering and things are getting back to the quote unquote new normal. Yet the printing presses from the Federal Reserve continue to burr. And to me, it's almost mystifying. I mean, I really don't know what's going on at the Fed to say that we're not going to have any movement till 2023.
Well, I think it's interesting when we talk about those stimulus checks, they are hitting people's accounts at this point. I'm curious to see what next week and the next couple of weeks will look like in terms of retail participation, whether it's in the stock market itself, which we're very well aware of, the Reddit trades and the crowd kind of trades, or if we're going to see it in the Bitcoin side of things. So I think a lot of this is going to be dominated about what retail is actually doing with those checks.
Mm-hmm. Absolutely. I mean, I think my check's going to go pretty far down here in Latin America. It's just my thought, but the dollar seems to be getting stronger. So let's jump on to the next item of news. The third wave of COVID has hit Europe, as well as certainly it's been down in Brazil. There's a lockdown in Paris, as well as many parts of France as well, and really in other places all over Europe. It seems like the third wave is in full effect. Is there an end in sight? I mean, what are your thoughts? I mean, certainly I know the United States has done a better job of getting the vaccine to the population, with the exception of England. I think the United Kingdom has done a phenomenal job of getting the vaccine to its population. I think they're the most vaccinated population with the exception of small little Israel. But the United Kingdom has done a big job. We know that they've been hit very, very badly with the UK strain. What are your thoughts on this kind of, we're just over 1 year of the coronavirus pandemic, and it's still continuing to rage on.
It is. We just got past the 100 million vaccinations with 48 days with Biden being in office. So there is progress being made. There's a lot of progress that still continues to be made because there are a lot of people within that 20 to 45, late 40 age range that makes up the bulk of our working population that still is not able to get the vaccine yet. I mean, I'm still on a waiting list. I'll probably be one of the last people to go, and I want it. And I think, it's important for everyone to at least consider it and take their own health and what they think about vaccinations into their decision making. But I, for one, can't wait to get it and get back to life as it was. And I think we still will continue to be careful, and you still need to wear masks. It's not eradicated yet. And I think our lifestyle has changed. I would say in some ways for the better, when it comes to airlines and transportation, and when you eat out, like things are just, everything is cleaned, everything is sterilized. That's a good thing. And hopefully people have learned more about their own personal grooming habits. But I think, the U.S. is also taking on a monumental task. We have 330 million people in this country. We have more people than there are in the UK. So for us to get as many vaccinations out as we can and basically mobilizing this war effort, if you will, it really has been quite impressive. And yes, we're sitting here saying, it's a year and we're still having this conversation. The fact they were able to bring vaccination to the market in 9-10 months is amazing. And that lends to the open source technology that was available, that it was a collaboration of scientists globally where they had actual real-time peer review happening. So that's extraordinary. I know, we sit here and we're like, oh, it sucks. We can't, the bars are still at 35%, and you can't even go to a bar, and, we have to be socially distanced and all that. But, you have to sit back and put things into perspective. The fact that we had a vaccination, within 9-10 months is remarkable.
It really is amazing.
It's a scientific feat.
And I have a funny story to share. I was actually supposed to be in Panama City today. But when I went to the airport, I got to the airport about an hour and a half, 2 hours before the flight. And they closed the flights now 2 hours before. And not only did they close the flights, but here in Colombia, if you don't get to the airport 2 hours, within that 2 hour window before, they don't even let you in the airport. So literally there was nobody, me and another person that I was traveling with, my friend and I, we got left in the street. We couldn't talk to a person because they won't actually even let you in the airport. So we ended up I just ended up booking a hotel and going back. It was, not the end of the world. Rather, what's the big difference between going to Colombia or doing the show from Colombia or Panama City? So I just went back to my hotel. It doesn't really matter. But he was a little upset because the other problem was he was going back to the United States, and you have a 36-hour window. So if you don't have a COVID test within 36 hours, and it's not so easy to find a 30-minute COVID test in every place in the world. Fortunately, Cartagena has a 30-minute COVID testing site. So the United States requires either a PCR test or an antigen test. And the PCR test takes about 24 hours to come back, and the antigen test gets back in 30 minutes. So he had to go and just get a new test because it was over the 72-hour period between the time that he had taken the test otherwise.
So, Mike, what's it like over there? Are people? Are there mask policies? Is there social distance policies? Does it look kind of?
There's totally social distancing. There is mask policies, and most people in Latin America, from a lot of these countries were previously military dictatorships. So I don't think the people are likely to mess around and not listen to the police. So if the police see you and you're not wearing a mask, you just wear a mask. Or if the people aren't social distancing, I mean, it's very, very organized in Latin America for social distancing and mask wearing. What I do notice though is that generally, bars are open, clubs are open, restaurants are open. I even went to a nightclub when I was in Bogota. And I would say that the reason for that is there is absolutely zero social assistance. So basically people are really starving because they don't have any money without tourists. So in a tourist town like Cartagena, I mean, the level of desperation for people on the street, I mean, you literally are surrounded by 50 people on the beach if you're a person who's a foreign Westerner who looks like a tourist and you have money. I mean, at times I was just saying, no quiero nada, no quiero nada, quiero paz. No, gracias, no quiero nada. Because literally you are, me and my friend, we bought dinner for a bunch of children that were, we know that they're just, street beggars, but we bought dinner and lunch for a whole, probably about 6 or 7, maybe 8 kids that came by everywhere. Every one of them, we just said, sit down and eat. But I mean, really the level of desperation in Latin America is mainly due to the social interruption of having no tourists. In a place like Cartagena, there is literally, there's a lot of people living on the street. Medellin had a lot of people living in the street. Bogota was a little bit better, but certainly was very.
What did you do, like the Escobar, the Escobar tour?
You know what? It's so funny because when I went there and we asked, is there a Pablo Escobar tour? And they said, no, you can't do that. It's illegal. That's illegal. But we did go to see, it's called Community 13, which is where he was from. I did go to Community 13, but we kind of just did like a private tour of all of Medellin. And, really cool. But we did see Community 13 and it was very interesting. And I did see, but the funny thing about Medellin is that Medellin is a huge beneficiary of the $2 billion of Pablo Escobar's money that was confiscated by the government, because they have a great public transit system. They have escalators in the barrios because they reused the money from Pablo Escobar's money was used to improve the city's infrastructure. So that was a really interesting side story.
Yeah, from what I've seen, it is absolutely beautiful, and we could probably take some tips here when it comes to infrastructure. But the last thing I'll ask you about Latin America, Brazil is just having a horrible time with it because they just think it's a hoax, or their leadership thinks it's a hoax. And look at what's happening there.
Brazil is very funny because it was actually almost exactly like the United States. It's got 27 states in Brazil. So most of the country is currently locked down. So regardless of what Bolsonaro thinks, the governors still lock down pretty much every city based on science. So Brazil is completely locked down now. And, I was planning to go back to Brazil, but, I'm not going back to Brazil because there's nothing open and it's completely locked down. So I'd rather just stay in Colombia or go to Panama City or go to Mexico or something else. But the fact of the matter is that, yes, Brazil's numbers have increased tremendously. They have their own unique strain that comes from the northern city in the Amazon and in Manacias, I think it's called, but it's its own unique strain. It's very, very, contagious, and also I think a little stronger than the other strains that are out there. So they definitely are having a tough time. And I would say that Brazil is currently completely closed. I would say that probably with the exception of Rio de Janeiro, which almost the entire economy relies on tourists. And since Brazilians really can't go anywhere, the only place for them to go is Rio and some of the beaches and stuff like that. So the Rio is the only city that I know of that's open.
Got it.
Let's talk a little bit about how the markets are affected by inflation and inflationary concerns. Here are some of the most well-known facts and trades ideas about inflation. I'm just going to ask you, Jill, what is the market's reaction to inflation usually? I have a couple of things I'll talk about, but I'm very interested to hear what your thoughts are in terms of the markets. What are how do you, as a trader, deal with inflation, and how do you deal with inflation as an investor from a very broad standpoint?
Well, I think we're seeing it play out in real time. For example, I feel like the Dow and the S&P are trading one way and the Nasdaq 100 is trading another, and it seems to really be a
bifurcated market. Yes,
for sure. And then, it's interesting to see the correlation between what's happening in the 10-year and what's happening in the Nasdaq 100. Part of that is technology stocks or growth companies, because even though there are a number of the real big ones that have cash on hand and they're doing well and so forth, a lot of these growth companies will grow via debt. So when interest rates are so low, it's easier for them to pay back and to service the debt and so forth. So this impacts it when there's a perception out there that rates are going to rise because it's going to make that debt servicing more expensive. So that's why you're seeing some of the growth stocks get hit. It's interesting to see how some names are reacting, even though the dollar has been moving higher, just because of how it impacts, when you look at the FX accounting and so forth. But I think right now, as from an investor's perspective, and my take's a little bit different than yours because I'm more of a long-term investor. You're just going to hold anyway. It's not like these machinations in the market are going to impact you from a long-term perspective if you just have a portfolio of S&P 500 stocks, right? This is part of the business and economic cycle. So, that's my perspective, looking at it through a longer-term lens.
Yeah, so I just like to flesh out a couple of points and certainly cover the trader's point of view. So usually what happens is that volatility increases with inflation. So as inflation increases, you get increased volatility. That means you get bigger swings from up to up again, to down again. And of course, technology growth companies get hammered by an increase in inflation. Interest rates rising also hurts growth companies. And it's, tech companies are the majority of the growth companies. Value companies, value plays come back into fashion. And we've really seen this happen real time with the Dow, with the Nasdaq. So value companies do well, growth companies do poorly. The S&P is somewhere in between with a little bit of a weighting towards growth these days. So S&P kind of got smacked a little bit harder, but the Nasdaq got smacked the hardest. In terms of trading, the volatility is great for traders, and that's pretty much the trader's perspective on inflation. Well, we also have our announcement that we have our #1 best trader competition coming up. Our registration for our spring novice competition. It's Jill and I's favorite time of the year when we have our #1 best trader competition. It is now open and runs through. Our competition entrance is now open and runs through April 4th. Competition begins on April 5th. It runs for 20 trading days until April 30th. So the sooner you sign up, the more time you have for boot camp. And that's right. Don't miss out on your time on the trading stimulator. So if you sign up early, you get more time to mess around using your Dash Trader platform. And I believe we're even going to do a special little class for everybody this time to teach you how to use the Dash Trader a little bit more effectively. So definitely visit the #1 best trader for more information to sign up. Our prizes include 9 months access to the Dash Trader Pro platform. And of course, the winner's name will be displayed on the Nasdaq Market Site Tower in Times Square. Jill, thank you so much for being here as always. Okay, you can officially start your weekend. Your work is done, and enjoy yourself. And how is the weather there in New Jersey and New York?
It is 48 degrees right now, according to my watch. And we're supposed to start to get spring weather this weekend. So I am so excited to go on a couple of runs this weekend. So Mike, thank you as always for having me. Safe travels.
Yes.
And
thank you so much.
We'll talk in a couple weeks. Take care.
See you soon. Bye-bye, Jill. Thank you. All right, everybody, let's jump to the charts. I'm just going to squeeze down my charts here for 2 seconds. See if I can figure out how to do that. All right, so I think we have our Dash Trader charts up here. I'm going to go through each and every one of the markets, but since this particular class is on trading technology and the technology of trading, we're going to feature 2 different indicators this week. And I'm going to show you, as always, how to use your Dash Trader software a little bit more effectively. So let's first, I'm going to snap in a new chart area. Okay, so I'm going to add a new chart area before. And I'm actually going to just use one new chart area. It's going to go up here. I'm going to add a nice indicator because we were talking about volatility. So we're going to feature a new indicator each time we do one of these shows. So we've been talking about volatility. So let's add in study config. Let's put in our CCI. You just move it on over. If you notice, I just went to the box, click select, moved it over, commit. And there, if you notice, we got our CCI. Now, why would CCI, the commodity channel index, be a great indicator to use in a time of volatility? And if you notice, what the CCI indicates is areas of overbought, okay? Overbought, which means it should go down, which overbought means there's lots of supply. Lots of supply means there's areas of resistance. And then, of course, we have oversold, right? So we're oversold. Now here we're starting to get the beginning of an oversold reading as we just get below the negative 100 line on the CCI. And the CCI is an oscillator. It moves between the negative 100 line at the bottom and the positive 100 line. It has a 0 line in the middle, and it oscillates. And sometimes it can get really, really extreme, which would be the positive 200 level or the negative 200 level. And on the Dash Trader software, you actually have some really great capabilities. You can actually pretty much configure every element of the indicator. Just gonna double click on it. Okay, double click on my CCI. So if I want to change the color of the signal line, I can change that. I have it preset to yellow. You can change the buy signal, the sell signal, or the buy signal. So the reason we call this the buy or the sell signal is that when it's deep, okay, when it's deep into support in an uptrend, green generally means buy. So if it's pulled back deep into support and it gives you like this kind of low and then higher low, low, higher low, which is a very, very overbought area, it indicates that you're going to probably surge out of that area back to the upside. Sold, oversold area, right? Sell off to follow. Buy area, buy area, buy area, right? But this one, notice the divergence. In this one, this would not necessarily be a great buy area because it's got 3 equal to higher lows while this price is still making lower lows. So you really want to see something like this where you have a low and then a higher low, and then that would be a confirmation that the sell-off is done. And here we're just starting to see that the sell-off is getting into the buy area. So we're not quite ready to dip in yet, according to the CCI. Now, the other indicator that we have on the chart is we have the moving averages. And I'm actually going to take my moving averages off. So I'm just going to show you how I can remove my moving averages. Remove, remove, remove. All right, I just put on there the Bollinger Bands, and the Bollinger Bands has been one of our featured indicators. Pretty much, we mentioned it in one of the in the mentions in our social media posts, as well as we have an upcoming class that's going to be released on Bollinger Bands. But just to quickly go on and talk a little bit about how Bollinger Bands are used, is that in a time of volatility, you have a consolidation, which is a balanced time in the market, and then you have a breakout, which is an imbalance period in the market. And the way Bollinger Bands are used best is that they constrict, and they use basically 2 standard deviations and a moving average. As price consolidates, the standard deviations come in and squeeze the price, squeeze the outer envelopes towards price, and they get consolidated towards the moving average. And when they start to break out, they expand outwards. And then when they expand, they press against the upper envelope, and then they snap back against the lower envelope, and then they snap back against the upper envelope. They snap back against the lower envelope. So we really kind of use them as a ping pong. And when you use them in conjunction with the CCI, you're basically using 2 filters to kind of look at the market through a lens of these 2 filters. So not only are you looking at your price and volume bars, but you're also looking at the volatility and reading the volatility, and you're saying, okay, well, the Bollinger Bands here are being pressed against. The bars aren't closing within the envelopes. And look, here we were just pressing against the bars, but we weren't deeply extended against the lower envelope of the Bollinger Band. Here we have low, higher low in terms of our CCI, and then we snap back to the upside. Okay, and certainly the fact that we did not get all the way up against our Bollinger Bands is showing that the market is running out of some of its strength. We have lower highs, descending lower highs on our CCI, which is, as the market is making higher highs, again, another divergence. So definitely it's showing signs to me that this uptrend is possibly running out of steam. Not only is it running out of steam, it's happening at a time when the Fed has said it's going to continue to print money until 2023. And it's also happening while the 10-year rate is at 14 months highs and everybody's pretty much concerned about inflation. We've just had a huge run. So certainly there's a lot of reasons why this market would be running out of steam. Now let us take a look. And the chart that I'm currently displaying is the CCI on the S&P. So let's take a look at the DIA. So here the DIA has come in pretty hard. Okay, today was a pretty negative day for the Dow Jones Industrial Average. Now let's look at that CCI reading. Definitely we have a high and a lower high. Very, very important divergence. Okay, very important divergence. Pulled back to our moving average inside of our Bollinger Bands. Again, we did not press against the outer envelope of the Bollinger Band. So we have two very, very bearish negative indicators as per the reading of our CCI with lower highs, as well as our Bollinger Bands with not pressing against the outside of the envelope. And of course, today we snap back to the moving average. We're still not anywhere close. So the move down on the Dow is not anywhere close to being done, meaning that we could potentially move down to 317 even. Now let's take a look at one of our other stocks. This started the move to the downside, which was Tesla. Tesla has a slightly different picture because Tesla has pressed against the lower envelope and now it's put in kind of a higher low today. It is looking like it's deeply oversold according to the CCI. So maybe Tesla is showing us that it's ready to bounce. That's a little bit of a different reading than, let's say, the DIA. Also different is Apple, right? Apple had a very deeply overbought reading recently, but it really wasn't that up on the chart. In fact, it did hit into its upper envelope on the Bollinger Band. So Apple certainly giving us an indication that it could potentially see further weakness. It's not down into the oversold area, which would be a buy signal. Let's jump and take a look at Facebook because Facebook has shockingly been incredibly strong lately. And it's continuing to stay in the overbought area, but it's probably going to get ready to pull back. It had a very, very high volume day today, and it certainly has, it's in the sell area for the CCI, coming into a lot of resistance in this area. So I want you to really take a look at your CCI and put it together. It works very, very well with the Bollinger Bands, and it's a great way for you to filter some swing trading opportunities out. I'm going to take a look at one more thing, which is the GLD. GLD, and I'm just going to pop on the GLD on the weekly. The weekly GLD is giving me a very, very strong buy signal. The reason that is if you notice that we've come against the lower Bollinger Band and we've come against this kind of overbought region, oversold region of the CCI, and we've kind of hooked back to the upside. And that's pretty much it. So we look like we're going to come back to the upside, and certainly gold looks like it is at the best value that it's been for some time. It recently surged from 157 back. GLD was 157 up to 163. And that's certainly looking good. Now let's take a look at GBTC, one of our favorites. Certainly Bitcoin has done an amazing run up to 48,000. It pulled back, blasted off even higher to, this is on the GBTC. It went even higher on the actual Bitcoin itself. But on GBTC, it looks like we have pulled back to our moving averages and has gone back up. And it looks like we're consolidating once again for potentially another breakout on Bitcoin. Certainly that makes sense as the U.S. government continues to print money and governments around the world continue to print money. So it looks like GBTC is indicating that Bitcoin is consolidating. Now, the only thing that is a little bit of a concern is that we haven't made a higher high yet. But if we break out above the 56, 57 level here on the GBTC, that we will blast off and go even further to the upside. But certainly all is looking good for GBTC and Bitcoin. Next one, let's take a look at oil, USO. And oil took a big hit on Thursday. Took a big drop on Thursday, but it was deeply oversold today, and certainly it did a nice job rebounding. Oil has come back pretty considerably lately, and that's the one that we want to keep an eye on. Let's take a look at some of the other industrial stocks like XOM. XOM, very, very similar situation to oil. Recently sold off, but had made a tremendous run all the way up to 62, and it just pulled back from the upper Bollinger Band down to the lower Bollinger Band. That is very similar to most of the stocks on the Dow. On that note, I'm going to go right back to my slides. I'm just going to remind everybody to stay up to date with everything Dash Trader by signing up for our monthly newsletter email. Simply fill out the form at the bottom of our webpage at www.dashtrader.com. Subscribe to our new YouTube channel, Dash Trader TV. I have a whole series coming out on how to use indicators. And then, of course, I'm going to be having another series coming out on trading different styles of trading. Different time frames of trading. We have an 8-series class on different styles of trading and an 8-series class on different types of indicators. Make sure to follow us on all of our social media outlets, which is LinkedIn, Twitter, Facebook, and of course, Instagram. Thank you so much for joining us here at the Dash Trader Newsroom, and we look forward to seeing you more often. We are going to be having updates every single week during the course of our trading competition. And of course, Joe will be joining us bi-weekly. Have a great weekend, everybody. Stay well. Goodbye, and have a great weekend.